welcome back to another. Oh, look at that! We got people saying hello. Guys, wave everybody. Welcome back, everyone. This is our third in our series of Spring into 2021 series. Okay, so somebody's got YouTube on, and I told you not to have YouTube on or go on mute, please. Otherwise, we're going to get echo, and it's going to drive everybody listening crazy. So anyway, so this is our third in the series of 4. And we are talking today about knowing your worth. I think it's going to be an important topic, and one that I'm assuming is going to have a gazillion questions popping up. So for all of you out there, we're going to appreciate any questions you have. In this one in particular, post them into the chat if you're watching on YouTube. We will try and get to as many of your questions as possible. My name is Sam Fiorella. I am the administrator here at Echo Means Business. With us today, we've got some of our UAG members. As you can see, Tino with AJ's Lawn Care, JC, Lawn Squad Mowing, Chris Sloan, Sloan's Lawn Care, and of course, Mike Bedell. We also will have a surprise guest popping in shortly, who's going to come in and tell us everything we've said to that point is wrong, and he's going to tell us why it's right. So we're going to try and get as much out as we can before he shows up and get it out. So today, know your worth. We're talking about know your worth as part of this series and getting ready for spring. The number one question that I see in all of the forums, in our chats, and this is not just this year, but I would say over the last 6 years that Echo Means Business has been a formal community, is how much do you charge for that lawn? How much do you charge for mowing? And it baffles me because just because someone is mowing a half-acre property at $50 and making money doesn't mean that you can charge $50 for a half-acre property and make the same amount of money. What's your overhead costs? Opportunity costs. What's your marketing costs? There's so much to do. What's your travel time to these individual properties? There's so much that goes into understanding how you make money and what is your hourly rate. And that's what we're talking about, knowing your worth. At what point do you make money? Do you lose money, right? And should you be doing something when you're losing money? Is it worth it? Is it not worth it? These are all the things we're going to talk about today, and we're going to break them down. So let's start really high level, and we'll just drill down from there. Number one. Do you guys go to the market and say, okay, everybody else in my community is charging $50 a lawn or $40 a lawn or $30 a lawn or whatever it is, and that's what I'm going to go to market with and then hope I make money at the end of the year? Is that how you all started? Or are you at a point now where you're actually breaking down your hourly cost? You know what it takes you per hour, per square foot, and you're charging based on a formula. So I'm going to start with Tino only because he's the one next to me up here on screen.
And your example is totally right, because that's exactly how I started, and like I said before, I came from the oil field. And so my pricing in my head was, okay, I want to make $30 an hour. And so when I first started out, I was pushing the mower, I didn't have zero turns or nothing like that. So I was like, okay, well, an average yard takes me between 45 minutes to an hour. So $30 an hour, boom, that's $30 yard, And so come 6 months after that, I don't have no money. I'm broke. I got to buy string. I got to buy oil. Got to buy gas. And so it came real quick in that first year. Like, I have no idea what I'm doing with pricing. And going on YouTube, you see a lot of guys talking about, they'll bring up prices, every so often and say, okay, well, I do $40 minimums or I do $50 minimums and stuff like that. So I was like, okay, well, then I got to go up to $40. And so I did that and still breaking even. So like, okay, I'm still doing it wrong. And so what I end up doing, I added up all my costs. I mean, oil, gas, maintenance, spray, anything I could think of. I added it all up and I broke it down to all my customers that I had at that time. And that's the thing that I do that I know some of y'all can help me get even better, is that I got to do it all the time, because the yards I have in December aren't the yards I'm gonna have in the spring. You know what I mean? So when the seasons change, I pick up yards, I lose yards. I got to figure it all out again. And I know there's a better system. I can't wait to hear it. So hopefully, I know Mike's smiling, so I think he's got the system already. He's gonna tell me. But so that's what I do, and it boils down to what it costs me to put up to somebody's house. And since most of the yards that we take care of are all cookie cutter, they're all the same size. Corner lots are the same size. Regular lots are the same size. If it's an acre, it's an acre. You know what I mean? They're all pretty much cookie cutter yards. And so I know it's going to cost me $18 to drop my gate. And so if I want to make 50% profit, then I got to charge at least 36. But that's still not enough. You know what I mean? So like I said, it fluctuates for me for how many yards I have, because I have to divide all my income or my costs into each yard. And so that's how I've been doing it now. And I'm making better profit, you know, depending on what my budget is, because now I got new equipment and I got other stuff that's added all into it, certifications and stuff like that. And so it's an ongoing thing, but still I keep my head above water and I'm making profit, and I'm not just pulling numbers out of the air like, okay, well, yeah, you know, $60 for this one, when I know, you know, it's going to cost me $25 to drop my gate at this yard. So I got to charge 50 or I got to charge 70, depending on, you know, what the size of the yard and stuff is. So it was definitely a learning curve, but it's something that I think everybody needs to figure out. And so they're making money, you know what I mean?
Yeah, I want to circle back to that at the end. Like, do you actually at the end of the year say, how did I do, and break it down? Like, this is what I set my hourly rate at, or my costs per square foot.
Yeah.
You know, and then compare at the end of the year. And then do you change it next year when you potentially get new equipment and stuff like that, right?
I let my wife do that. She'll take all my bank statements and see, okay, this is how much I've actually spent in this quarter, you know, because pretty much the seasons you can break up like that, and she'll add it all up and be like, okay, well, you messed up because you didn't have this, or you bought this and you got to put this in there now. And so, like I said, it's always evolving, and so I'm sure there's better ways to do it, but I think that's what's worked for me, as far as not just saying, okay, well, that's a $30 yard, that's a $40 yard.
Yeah. Letting your wife do it is clearly a smart thing, because she's obviously the looks and the brains of the operation.
Definitely.
But yeah, how do we? So let's help this guy out. What do you guys do?
Yeah, so I think Tino said it best. He said the key word. The key word was budget. You know, and setting aside what you need, how much you're going to put a lot towards your expenses, towards your overhead. I could say that my first year, I totally winged it. And I learned how to do everything this year based off of all the mistakes that I made last year. Going in, when I started up, all of us had the same questions. We were reaching out to many people on social media and asking, hey, what should I charge for a yard? Well, everybody's situation is completely unique. And I've learned that as I've gone along. Location, gas prices, route density, many factors that come into play as to what you're going to charge. My situation is going to be different from Mike's, as it's going to be different from Tino's, as it's going to be from everybody else's. So the title of this live session here, Know Your Worth, that's an individual worth. And it's a very unique price tag that you're going to put on the labor that you're going to put into your yards or into your properties or anything as such.
How about you, Chris? How did you, when you first started, is that how you did it? Just looked at what everybody else was charging, or did you have a different system?
Yeah, definitely. First year was pretty tough because I was new to the area, trying to figure out what to price, how to price. So I think the main thing is that your first year, you just have to know that you're going to make some mistakes. What helped me is learning what the general cost is in the area. And that's not going towards your expenses and running your business. But let's say if one of the guys have a higher cost for running their business, you can't charge a $40, $50 yard, $80 just based off of having so much equipment or so much overhead. So for me personally, it helped for me to know my general area. That gave me a cost basis to know about where I should be, then I can break down some of the numbers and know if I'm in the right area. Because I know it's some lawns in Florida that's different from Ohio and different from California. So knowing that equation helped out a lot.
Mike?
Well, this is a topic that everyone knows I'm pretty passionate about. And I started off like everyone else. When I was the neighborhood lawn kid, part of the reason that I was really drawn to that is I didn't like making $7, $8 an hour, which, believe it or not, was the minimum wage back then. Washing dishes or putting away skates at the local ice arena. I thought it was amazing that I could make $20, $30 cutting a lawn. And that's what drew me to this industry. And I think it's what draws a lot of people to this industry is they see people outside and they realize what people are charging per lawn. And they do this quick mental equation and go, well, that's more than I make an hour at my job. You know, I'm going to get out there and do this. And it's enticing and it's what brings everybody in. But that type of thinking doesn't actually allow you to stay in this industry. And unless you have a lot of help from others, it's like the guy said, your first year, you're kind of guessing at what some of your costs are. You know, you're lucky that if you're doing it right and get insurance, at least they're going to tell you what it's going to be for the year. But yeah, you're going to have to kind of get out there and figure out what is your fuel costs. You know, are you going to do any advertising? Well, what does all that cost? But at the end of the year, you know, Tino does it right. He has his wife at the end of that first year. Obviously, I mean, she's a smart one, right? So let her put together the budget. Some people now, and this wasn't available when I started, but it's 2021. We have software out there that lets you do that in real time. But sooner rather than later, as soon as you actually have an accountable budget, that's going to give you something to work off of. And that's what's going to empower you to really know what your costs are and what you can price things for. And all of a sudden, you're going to start to care a lot less what everyone else is charging. Knowing the market rate is fine. If anything, if your costs happen to be super low and the market rate's super high, that gives you the wonderful ability to clean up on every job. I mean, why leave all that money on the table, right? But overall, I think that you guys have touched on a lot of really good points. We got to go in this industry from the guessing or what I heard on a podcast per hour or what someone will do it for to actually getting to a point where we all run this like the big businesses that we go and try and work for, the commercial properties. Those guys most of the time know their costs a lot better than we do. And that's why, you know, they stay there in that building and are successful and they go through lawn guys every year. It's maybe not because we're not doing a good job. It's because we're the ones not surviving. So I think that's tease us up to have a great conversation here because that's just the high level part of it. And the deeper you go with all of this, the more success you're going to have because the bad news is it's never ending. Your costs will always change. The market always changes. So, you know, JC was saying, you know, I had to figure it out the first year and you know, now it's helped me the second year. I was thinking, yeah, but the fun never ends. And so if anything, this is something that, you know, much like we get really good at trying to stripe out a lawn or prune some shrubs or have the safest parking lot in the winter, this is the stuff that we ought to really be trying to get really good at or find someone on our team that can help with that.
Yeah, definitely. I want to just remind everybody watching, thanks for the comments. Ask away. If you've got any specific questions of our panel today or UAG members, we got people from different numbers of years in the business. So we've got all kinds of perspectives, different parts of the country as well. So don't hesitate to throw some questions in there. Also want to give a shout out to Little's Lawn Care. We got another Canadian in the house. Woohoo! I always love to see when the fellow Canucks come up and join us here. So why don't we break this down? I mean, I think we're all in agreement that, you can't just wing it, although most guys do, and women do in the first year, I think, unless you've had some kind of a business degree and know how to calculate your costs. Let's face it. You charge what you can charge, and then you hope that you've made money at the end of the year. But obviously, that's not the way to grow. So why don't we talk about let's get really, into the nitty gritty here. What are all of the things that have to go into identifying your costs? I think a lot of people don't understand all the, like, marketing, HR, certifications, supplies, travel time, factoring in bad weather, that, days that you're not going to be able to, like, all of these things. So why don't we start a list? Everybody go through, like, what do you include? I'll start to put together a list, and when we post this to the site, maybe we'll actually have a little bit of a checklist for everybody. So whoever wants to go first, go for it. I'm taking notes. I'll be the secretary today.
I would actually like to step in on this one. So everybody's been new to the business, and I think the main thing is that you need to have someone that can mentor you and guide you in the right direction. That way you can know your cost. So going into the second year, a very good friend, I consider him family, Rick Romans, with Caleb's Lawn Care, he actually took the time to break down the cost. So what I do is I break down from gas to insurance to business costs, knowing all your numbers for the daily, okay? And also saving for the wintertime, which a lot of guys, some may not be used to saving. So basically, without drawing it out, you want to make sure you know all your costs, if you have employees, your insurance, day-to-day business, okay? And you need to know per day, this is what I need to make. Also, for wintertime, you take your expenses and then you divide that by how many months that you're mowing, okay? And you actually want to double that, okay? So let's say I'm just going to throw a number out there, 10,000, okay, for the wintertime. Try to make that 20,000. That way you have a cushion and you know, okay, these are my business costs. This is my cost for savings. And for me, it's been a godsend because being comfortable during the winter is a totally different feeling from struggling in the winter. So hopefully that helps you guys, but definitely try to stick with somebody that can mentor you, that's been in the process, and they run a very profitable company. And that's the key for me that's made me so successful in business.
So I think the mentorship is a fantastic idea. We're going to actually, Mike and I were talking about that in email earlier. We're going to actually have a whole session on mentorship. I think it's going to be one of our upcoming sessions. So we actually had a good note in the things in the notes while you were talking, recovering equipment. Your downtime costs I got from you. So downtime costs is not just the inclement weather. You got to book so many days where you're not going to be working and earning, and that's a cost. But then your winter, if you're in the Northeast and you know that you're not plowing, you're going to have a couple of months of doing nothing. That's a cost. You got to calculate that into your overheads and then your equipment. All right, so I'll keep the list going. Tino, what do you calculate into your costs of operating?
Yeah, kind of expanding on what Chris was saying. Like I said, when we first started doing the budget, of course, I thought I had it down. I had all my business costs added up. I had them all broken down, and I was going to go out there, 2-3 years ago, and we're going to hit it. We know what we're going to make. But then I didn't factor in my bills. I didn't factor in money I wanted to save. I didn't factor in anything extra. So, I mean, like I said, I got the bills paid, but I wasn't making money. And so definitely when you go in and you start figuring out your costs to run your business, add everything up. Every single dollar you can think of that, I mean, birthday parties, I mean, Christmas, anything. If you want to put $25,000 in the bank, add that up. And it might seem like, oh man, that's a lot of money. But when you break it down to hourly, or you break it down to each yard, you break it down to each cut, or whatever, then it's $5 here, it's $4 there, it's $3 there. It's not as much as you think it's going to be, because you're breaking everything down to a service, or to an hour, or to half an hour, or however long it takes you to cut a yard, or however you want to work it. There's different variables you can use to figure out that number. But definitely add in your savings, and add in your winter money, and add in anything purchases you want to make. But add everything in, so that way your whole budget is your entire financial budget. You know what I mean? It's not just your business, it's not just your bills, it's everything. And so definitely pick and choose. I mean, it takes a while, and getting all these numbers together and adding them up, and then that's why I get my wife to help me out. But like Sam has said, I mean, there's great software out there, and the time you spend punching in all these numbers, it'll auto-populate everything every month. And then all you have to do is change, like, okay, I added a mower, I lost a mower, I got rid of trailers, and now I got a Isuzu truck with a dovetail. So now I don't have 2 registrations to pay. And so, I mean, it's got to be a different thing each year that you got to figure out, but definitely add in extra costs, winter money, savings, and all that also.
And don't forget, Tino, you got to add the tacos.
Oh, yeah.
Craig made a comment. Just, we eat so many damn tacos in this group that we have to add that in. That's like, are you buying lunch every day?
Yeah. Oh, yeah.
You know what I mean? That was a joke that he made, but think about it.
$600 a month and just tacos, So, I mean, you got to add that in the budget.
For you, it's $1,200 because you have.
Yeah, that's one thing that I like that Tino just said. That example that you had a couple of trailers and you got rid of stuff. Like, you had equipment that was probably eating up some money, and you realized that, and you're still able to do the job with the other equipment, getting rid of that equipment and using what you have and get the job done at the same time too. So like, those extra costs that aren't necessarily necessary is one thing that's also could be, contributing to the fact that you're not making any money on your business.
Yeah, no, it's true. Mike?
Yeah, I mean, that we're on the right topic here. It's the budget, and it's going through, and a great way to look into doing this is, if you're going to end up filing taxes on all this, and you should, your Schedule C, where you're going to be reporting all your income and expenses, gives you all these different types of categories. So that's always a great starting point, because inevitably, it's going to have to get turned into that. And whether you're doing it, or a tax preparer, or a bookkeeper, or a CPA, that's a great starting point. But it's literally every expense, like we talked about. Vehicle expenses, new equipment, repairing equipment. Is your company buying some of the meals? Are you buying meals? Office expenses. We all have these, at least home offices, if not, one at the shop too. And so it's actually going through and accounting for all those costs. But I see my buddy Josh is here, so let's let him chime in. And I know Josh loves a good budget, so let it rip, buddy.
Yeah. So welcome, Josh, everybody. Josh Curvan. So. Josh, we would try to get as much out as possible, because we said at the beginning of this thing that you were going to come in and say that we were all wrong, and now you're going to tell us how to budget properly, because we know how passionate you are about this. So the topic we're on right now is what do you need to include when you're looking at all of your costs to understand your overheads, your operating costs. We've already got things like your downtime, calculating your downtime. Equipment, new equipment that you want to buy, leases potentially on your existing equipment, marketing. I think I mentioned at the beginning of whatever your marketing costs are going to be every year. Tacos. What how much do you buy lunch every day? Look at that. What else do you got?
Have we touched base as far as the timeline for when these budgets are set for?
No.
So I know, obviously, everybody's in a different part of the country, but I not everybody works year round. So for us in particular, On the mowing side, we budget things for 28 weeks out of the year. Construction, we go 33 weeks out of the year. That's the one thing that I think we do different as a company is we press to make sure that we condense our budgets for 33 weeks a year, 40 hours a week, 5 days a week. And there's room for the extra fat if we need to be. But as far as what's included in that budget, our fixed costs, obviously our insurance, our overhead, my salary, my managing partner salary, those are all numbers that are set in our budgets we put every year. Variable costs like our salary, our gas, believe it or not, my workman's comp will fly up and down. So those are all variable costs. But yeah, I'm sure a lot of what Dell and these guys have said, I chime in the same way. I'm not going to say anybody's wrong because everybody's company is different. We just, in particular, I like money and I'm greedy with money, so I'm not going to lie. Like we try to put everything in there. So,
well, you've also got, don't forget corporate taxes. You know, a lot of times people think, oh shit, at the end of the year, I got a bill that I got to pay that I didn't calculate into my costs.
Correct. So, I mean, you're keeping everything on top of, so in Mass, we're paying corporate excise taxes. We're formed as a S corp. So, you know, we're a pass-through entity, so we pay income taxes based off the profit of the company. That's probably the best move I made as far as budgeting. I can feed a lot of fat into the company that bleeds through, and it doesn't directly affect my pay. Yeah. So
I got like a bazillion questions that I've written down from all of the comments you guys made that I want to break down. One of them, to Josh, to your point, and I'd like to get everybody's opinion on this. Do you pay yourself first? One of the biggest mistakes, and as an entrepreneur, I know that I've made this mistake in my early days. You pay everybody else, you pay everything, and then if there's any money left over, you put it in your pocket. And then you said, shit, how do I afford food now for the family? And how do I afford my mortgage, to stay in business, to be able to pay everybody else? How many of you actually say, I'm going to get paid first? Yeah, Josh, you're greedy.
But it's not greed. So again, my salary is built into my overhead. It's built into my operating costs. So it's not being selfish. So I don't pay myself $100,000 a year as a landscape business owner. I'm not saying I don't make that, but my salary isn't $100,000 a year. So what I'll do is I pay myself a base salary based off the 40 hours a week. And then I have I can take not deductions. I can pay myself out dividends each quarter. So if there's enough profit after everything is paid off, after I've made my investment back into the company, after I've paid my foreman, my guys are paid, everything's clean. Yeah, that money's mine, of course. But yeah, I make sure that I'm paid, because if I'm not paid, I can't run my company. I'm not going to be a happy camper, and you know, no one's going to want to work for me and make me money. So listen, we're in this to make money, not give it away for free. So
yeah, no, I think that is probably one of the biggest mistakes people make. How about you guys? When you started your businesses, did you make those mistakes, or were you smart enough to know I got to figure me out first?
Yeah, I mean, I was much like you, Sam. When I started out, I was not that smart and forward thinking, and it only took a year or two. And thankfully, I was young and didn't have a lot of costs. But yeah, I realized, like, holy crap, my friends are, you know, these goofy musicians I'm paying to spread mulch, you know, heck, they're making more than I am. This isn't such a good deal. And so, yeah, if you can build, and you ought to, as an owner, build that into your budget. Yeah, your salary ought to be in there, and that's just the starting point. It should go up from there. I mean, you know, some of us like to invest through our businesses, and whether that's buying new equipment or buying other things. All of those really ought to be built into what you're charging every hour. Otherwise, you'll always fall short.
Chris, how about you?
Well, I actually agree with both of them. As long as your budget is rock solid, you know, all your costs, your expenses, and your salary is going to be in there. So it's automatically calculated in the budget that you have. So you're always going to be paid. So I definitely agree with both of them. One thing that I did a little bit different than probably some of the guys is that profits we took to invest back into the business heavily. And that's only because we were in a position to do that. So I'm not saying that's something general or something that everybody does. So let's say if you have an extra 20,000, instead of just saving that and it's not doing anything, how about buying some equipment that can make you 100,000? So that was one of my goals, is to invest back into yourself. So if whether it's 1,000, 5,000, if you're comfortable enough to do that, buy some equipment that's going to make you more money in the long run. So I definitely agree with these gentlemen, but that was something a little bit different that I did.
That's actually something, guys, we should probably take up on a future session, is like knowing when to buy equipment and what equipment to buy. I know everybody tries to go, what's the most powerful? What's the sexiest machine that's going to look good on the back of my truck, as opposed to what's got the best warranty? What piece of equipment is going to make me the most money, not look the sexiest on my back. All right. So that's something we should probably pick up on another one. But
that's a really, really good point, Chris. You got to, like I said last week, you got to know where you are and you got to know where you're going. And there's different seasons where it makes a lot of sense to invest back into your business, and maybe other seasons where you're investing more into yourself. And there's never a right answer. And in turn, like you mentioned, the budget being rock solid. Yeah, and then it changes all the time too, and so it's good to keep up on that, because life happens fast. I mean, we all lived through last year, right?
Yeah. One of the other things that came up in your comments that I want to drill down a little bit further on is this idea of investing in yourself or investing in your business. You know, all of these get to know the pro interviews that I've been doing with you guys and others. There's a lot of talk of my future plans. You know, I want to have 2 trucks on the road. I want to have 3 crews on the road. I hear a lot of pros telling me that that's what they want. But what's the cost of that? You know what I mean? How much money do you need to put away today or every year or every month from your operating costs, or from your revenue, which obviously has to go into your operating costs? So can you guys talk a little bit about that? I'm going to start with you, JC, because I think you're the youngest in terms of years in business in this. So we'll start with you, and then we'll end up with the old guys. And I'm looking at you, Mike, when I say that.
Yeah.
Have you done that? Have you calculated, I need to put away, you know, as part of my operating costs, like $100 a month because I need to buy new equipment next year because I want to grow?
I could tell you I didn't do it my first year, but I definitely have been starting to write everything down and put things into perspective in the second year. And I agree with Chris. My goal is obviously, yes, pay yourself first, you know, make your profits, make it worthwhile, because if you're doing it for free, you're losing out. But my goals, I set a time frame, and then I set a certain amount, what I want to put aside as far as equipment. I kind of started bare bones a little bit. And, you know, my goal is to kind of build my business a little bit with the equipment that I want in the future, set that money aside based on the profits that I make, the little profits that I make. You know, it might take a little longer for me to get to where I want to be as far as equipment and stuff like that. But once I accomplish that goal, then I could continue on, you know, paying myself, making more profits, and obtaining more jobs based on the fact that I'm able to do more properties more efficiently, and set things, you know, in that manner. But I made many mistakes. And like I said earlier, definitely writing things down, going back into the budget aspect of things. One thing that I've kind of been doing, and I'm starting to do more often now than I did before, is I have an inventory. So I'm kind of old school. I like to write things down. And one of the reasons why I did that is because I didn't know what I had and what I needed. And I'd go out in the store, I'd buy, like, even from the smallest things, I'd buy a bottle of oil or something that I already had and I didn't need, thinking that I needed it. So that type of organization, as far as like documenting what my inventory is, will prevent me from having unnecessary expenses. But yeah, I'm not to get off track as far as, like, you know, timelines. I'll set myself a timeline as to, okay, I want to purchase this piece of equipment. I have this money that I'm making on an income, continuously do so, build up, obviously get that equipment, and then work on the next goal. But yes, it has to all be worthwhile. You have to make your money and you have to pay yourself. So I'm on that same page.
Chris, how about you? Do you plan for future growth by building in money out of every month's operating costs?
Yeah, actually, you have to budget for different things. So let's say if you do need equipment, definitely budget that in. That way, you know that that money is coming. But for me, I like to run it very lean. So if I can, let's say, purchase a mower, there's so many different mowers that you can get, so many different sizes. What we decided to do is get the smallest because we have a lot of gated backyards. So instead of getting a 61 and then push mowing a backyard, we decided to start with a 36. That way we can get into the backyards. We're efficient. Yes, it's going to take us longer for the front yard, but you have to make those key decisions. It's really funny because I talk with Rick Romans a lot, and it's been plenty of times that I say, oh, I want to go get this mower. Oh, they just came out with a new Vanguard, blah, blah. And you have to have someone with a good head on their shoulders that can say, do you really need that? Because if you have more equipment than what you're using, you're not making money with that equipment. So it doesn't make sense to have 10 trimmers and it's only 2 guys, or 5 mowers and you can only use 2 at a time. So back to the original point, definitely budget that in. And that's why you want to kind of double what you're expecting for unexpected expenses.
Speaking of which, Mike, do you guys use a percentage when it comes to repair on equipment that's inevitably going to happen, or things like oil, like Chris said, is that just based on your past experience? I typically spend this much, so I'm going to budget this much, or do you guys use a percentage of your value of your equipment or something like that?
Well, it's based off of our historic expenditures over the previous years. But then we take like what's happened in the past, and then we look where we are going with it, and inevitably that equipment is 1 year older, right? And so if you aren't planning on replacing that piece of equipment, the likelihood that you're going to do more maintenance on that equipment goes up. And so what we were saying about, or I was saying earlier about, you have different seasons in your business. After you spend a lot of money maybe buying equipment, your expenses for repairing that equipment might not be too brutal the next year or so, and it may give you some money to invest in yourself, but also knowing that in the future you're either going to be repairing that equipment or buying new equipment. And so it all goes back to that budget we were talking about. We literally have a line item in our budget called equipment repair and maintenance. And it's anticipated. Like typically in the month of March, our dealer has, in pre-COVID times, a nice big steak fry and gets us all together, but gives us an opportunity to buy parts at a discount. And so in turn, I know that I may, oddly enough, even though we're not really doing much of anything, may not be plowing snow, may not be out really cleaning up yards yet, I may have this unusually high equipment repair costs in March, but it's just us buying all our fuel filters and oil and stuff for the year that I know we're absolutely going to go through, but then also knowing that there's going to be things that break throughout the year and those costs are going to come up too. And so they're anticipated. And then if we go through the month and there aren't those costs, we know that they're either coming or at the end of the year, they just are additional profit for us that we get to keep because we got lucky.
Josh, what advice would you give younger guys in this industry or women in this industry, not just younger, meaning like new to the industry, that don't have the 74 years of experience that Bedell has, to say, okay, my average cost on repairs is $5,000 a year. How do you guesstimate how much that's going to cost you in a year so that you don't get surprised in your first year?
Besides Google.
Yeah, but we've already talked about that. Google is, you don't know
No.
what, you have used equipment, you got new equipment, you can't rely on what other people say.
No, but I mean, you can due diligence and make phone calls. You can call repair shops, you can call dealers and ask them what a a 5-year-old or 6-year-old mower typically costs to maintain, and they'll have a ballpark average, and then you can see if you buy that 6 or 7-year-old Snapper Pro, and then you leverage debt versus the accounts you have, and maybe you could go in and finance something at a 0% interest rate.
Yeah, well,
So-
Tino was talking about having every quarter that his wife pulls out his was it the bank statements or the credit card statements and says, this is what we're spending, and then updates it on an ongoing basis. How many of the rest of you do that? Like Mike, you keep talking about this famous budget of yours. You've got this budget. Are you actually updating your future months' potential or planned expenses based on what your last couple of months have been? Is it real time?
It's in real time at this point. That's allowed us to be the most profitable and most successful. I got to learn from, thankfully, having large business moguls as clients that's what they do, and that's what allows them to be very successful. Otherwise, you're just playing from behind all the time. You're letting life happen, and then you're going, oh, darn, I should have saw that coming, and trying to recover from it all the time. Versus if you're anticipating everything, the best that you can to the best of your ability, then yeah, it's very empowering. And so I'm looking at those numbers sometimes daily, at least a couple times a week, and we're at the point where one of the softwares we use, QuickBooks, it literally syncs and updates that information daily. So I'm able to get a real-time picture of where I'm at and where I'm going. And it lets me know if something's come up and out of line. I don't have to try and fix it a month down the road. I can go ahead and address that right now and start working on a plan today to figure out what type of budgetary issue there might be. Like last year, it was not being allowed to work for 5 weeks. How was I going to make up for that missed time? And what was I going to do about it rather than just sit here and feel bad for myself?
Guys, can we talk a little bit software? This has been kind of alluded to a couple of times, and I noticed in the comments we've also had a few people say, talk about software. What software are you using for budgeting, or is this all like Excel spreadsheets? Let's go around the room. Let's start with JC, and then we'll go around.
Yeah, for software on the business end of it, I do use the yard book, obviously, to maintain the business properties and the jobs that I'm doing. But from a budget standpoint, I'm doing everything pen and paper right now, and that's just the God honest truth. I usually do pretty good with my own personal budget. I'm kind of big on that, so I do bring that over to the business of things as well too. But my business right now is small, where I could possibly potentially down the road get like QuickBooks or something like that and do that. But where I'm kind of standing right now at this very moment, like I'm just kind of doing things pen and pad, and then hoping to progress with something later on that's a little easier. But I do know how easy and simple some of these software programs are. So I'll definitely be looking forward to doing that.
How about you, Tino? I think you already mentioned that you've got your wife doing it. What does she use?
Well, like JC, we started out pen and paper, and like I said before, my wife was really big into budgeting and couponing and stuff like that. And so she had budgeting Excel files that she would get from the budgeting mom groups that she was using for our household budget, and we kind of changed one that she had gotten for the business. And so we used that, till we got big enough to where we needed something better. And so this year we're actually going to be using LMN, and we're still in the starting stage of it. Luckily, the year's really early right now, and so we still got to input everything into it. But man, I mean, just getting into that program and seeing it, like the software that Dullen uses, it's kind of similar to Element also. And so, I mean, that stuff, man, it makes everything so much easier, so much easier. But off topic, I want to repeat what Josh said. You can call your dealer and ask them how much to maintain a 4 or 5 year old mower. I mean, that's like, if you don't get any advice from this, that's like something for somebody really starting out, like barely starting out. Do that. You know what I mean? I mean, that's one thing you could put in your budget, so you know. And when he said it, I was like, man, you know what? I wish I would have did that when I was buying all these old mowers, because my credit wasn't good enough to purchase brand new mowers, and so all my stuff was always used. And so something like that, as far as like Mike was saying, having a mentor that knows these things and did these things before, I mean, that's going to make it a lot easier. So sorry to get off topic, but that was just a real good piece of advice. I had to repeat it.
No,
Yeah, well,
real quick. Let me hop in. That comment about the dealer, I agree, is huge. That's probably one of the easiest ways you could ever form an outstanding relationship with your dealer. I mean, how many people would they have come in that go, hey, I'm starting a lawn care business. I'm trying to take this really seriously. Will you help me fill out this budget? Like, their eyes might bug out of their head, but they're going to go, holy cow. No one ever asks this question. Like, okay, and it's an opportunity for them to form a relationship with you because they're making money either way. Either they're saying their equipment's not going to make it. You're going to have to consider stuff that'll really allow you to do this, or they're just going to sell you the stuff to maintain your equipment or be the resource to fix it when it's out of your league. So I Josh, that's a gold mine comment right there. I agree. Tino, thanks for bringing that up again, because that's really where it's at. There's all sorts of resources all over the place, but the one that's closest to you is probably going to have the most realistic numbers. So I think that's something that everyone ought to write down. And you know, if you don't have a great relationship with your dealer, as we all go back to the new normal here and try and, like, you know, show our faces in different places again. Now's a great time to, if you don't have one, make a great relationship with your dealer.
Chris, what do you use?
Actually, I agree fully with JC. We have a notepad and pen and paper. Okay. I've seen a lot of the different programs that you can use, fairly expensive in my opinion, where you can have a notebook, write everything down, and that keeps you on top of your business. So if, let's say, if you have a program and you may have a glitch in there, you may miss something that's crucial. When you have the pen and paper, that way, every time you buy something, every time you purchase something, that's the way that I prefer to do it. I know there's a lot of different ways, but that's how we prefer to do it.
Josh, you got something to say here, I'm sure.
You guys are going to make me feel like I'm extra now. So all of our payroll, our QuickBooks, our CRM, they're all integrated into one another. I actually source a lot of the budgeting and reports out to my bookkeeper. I do have an Excel spreadsheet, just, you know, because I want to be smart and write everything down and, you know, contradict what my software says. But, you know, to take a step back, a lot of people think that I waste money on sourcing stuff out. But at the same sense, when it comes to, you know, fixing the mower on the side of the road, when it comes to spending your Saturdays and your Sundays fixing your truck, if you look at what you figure out your hourly rate is versus the time you're bookkeeping versus the time you're putting brakes on your car, it ain't worth it. You're going to spend more money. Like I pay retainers for mechanics now, and we're not a huge company, but we pay retainers in the winter for mechanics, so we don't have to go out in the middle of a storm and fix brakes or fix a skid steer. We have a guy that'll come do that. The same thing with the bookkeeping, with the taxes. On top of that, we then the liability if anything was to ever come up. But to answer your question in short, yeah, our QuickBooks integrates into an Excel spreadsheet. Excel spreadsheet comes out. We do check it once a week, but we're not tight by it. We go by it quarterly. We try to make sure we're hitting our goals monthly, and then we adjust. We adjust by what we're off. So And then the bookkeeper really tells us, stop writing stuff down and pretend like you know what we're doing.
How about you, Mike? What software do you use? I left you for the
Yeah, well, we use Jobber, and it syncs right in with QuickBooks. And Jobber's a really good scheduling component, but when it comes to the whole budget side and payroll and taxes, that's where QuickBooks makes it easy for us. And it's like Josh said, whether you have a bookkeeper or you're delegating to have software and kind of the AI do some of it, that's either way. You've got to you only have so much time, and you got to do what actually makes you money. And so that's part of why it's what works great for our size business and our system, but doesn't take up much of my time. I can, like I said, I look at those numbers frequently, but I'm not spending all day in my office shuffling papers and it doesn't look like the stock market exchange in here. It's a quick, I take a couple sips of my coffee and I see where we're at. I see where we're going. And it allows me to just continue to work the plan for the day and the week and the month. And that way it's just continual progress on our goals every day or week or month. And you don't get caught spinning your tires or spending time dealing with the fires that you just aren't really capable of putting out.
You know what? It's a good point. When you think about it, how much time what's your value? If you're out in the field working and earning, and versus how much are you paying somebody to do the bookkeeping? Sometimes, I heard somebody say, I don't want to pay somebody. I didn't hear, I just saw it in the comments. I don't want to pay somebody to do something that I can do. So I just use pen and paper and I calculate it myself. But if I know for myself personally, if I can work and at my billable rate, I get more money than paying somebody else. So I net positive if I pay somebody to do my bookkeeping while I go out and do what I do well and get paid to do. So Josh, you had something to say?
Yeah, no, I'll kind of piggyback off that. It's the same reason, like, why do you pay for daycare for your kids to go to school when they're little, so you and your wife can work? Because your money's worth more than what you're paying out for it to go. So the same sense. So what I want to piggyback on is what I think what me and Mike are saying is, so like on segment one, I talked about attorney's fees. Now we're talking about bookkeepers. We're talking about accountants and tax lawyers. If you call these people and just say, hey, how much is it for an hour of your time to write up my contracts? Hey, how much is it to file quarterly taxes for an S Corp or an LLC? You can get that budget together and build that into your overhead and add that into your hourly rate for your 33 weeks or your 28 weeks. And it doesn't cost you anything. It's the same thing with your indirect cost for a job. They don't cost you anything if you're billing them out correctly. So when I first started, I was that guy, the companies got to know me where I'm like, hey, this is Josh from blah, blah, blah. How much do you charge for a fall cleanup? And eventually they got like, dude, are you going to hire us or not? And I'm like, no, I'm just trying to get my competitive pricing going. I'm trying to see what you guys are going and make sure I'm in the market value. And there's nothing wrong with that. A lot of the guys I've made relationships with, Dave Consoli, who I had on the podcast, that's how I met him, was calling up a big company. But yeah, how much do you install pavers for? After 3 times of calling, he cursed me out, and then we met up for a beer. But guys, make the phone calls and figure out what things cost. I think a lot of guys are scared to do it, but if you call an attorney, you'll find out that $400 for a season comes down to literally pennies on the dollar for what you're adding into your cost. Same thing with when it comes to tires, when it comes to brakes, when it comes to equipment. It comes down to pennies on the dollar.
Absolutely. Yeah. And at the end of the day, it's something that when people say to me, well, how much does that cost you? I kind of get people sometimes when I go, well, it doesn't cost me anything. It costs my clients money, because that's who's really paying for all these costs if you're doing it right. It doesn't cost me money for QuickBooks or Jobber or even a new truck. My clients pay for all of that. It's just the cost of doing business. And when you know those numbers and you're empowered with them, you can just pass the costs on along. And if someone's not a good fit, if they're not going to fit into the parameters for what you can do business for, then it's time to go talk to somebody else. It's that simple. It's for people that invest in real estate or other things, they go and look at all these houses, and the reason they don't just go, I'll buy this one and this one and this one, is because the numbers don't work on them. And it's the same thing in our world. You may end up looking at a lot of jobs where the numbers just don't work. And that doesn't mean you have to fall prey to their pricing or what they want you to do things for. If it's going to lose you money, unless there's some charitable gain to you to do that, you're better off spending your time somewhere else.
You know what? Saying no is one of the most difficult things that business owners have to do, and it's probably one of the things that they don't do often enough. Can you guys talk a little bit about that? Because this goes into knowing your worth. Like, when do you say no? You know what? I have an extra 2 hours in my week. I could probably take that project just to fill up some time and put some dollars in my pocket. But at what cost? You guys want to talk about that? How many times do you say no and why?
That's a subject that's, I mean, I don't know about anybody else, but when I was first starting out, I mean, it's horrifying. I mean, I didn't start out, I mean, I wasn't as smart as Chris and had a full-time job and did this on the side. I jumped in, I mean, straight into the deep end and just tried to make it work, you know what I mean? And so you were at that point where, like, I think somebody back in the comments, I can't even remember his name. I think it was Hairston, something like that. He had mentioned driving 40 miles to do a $40 yard and, you know, not making any money on it because the gas was just killing him on that. And he's doing it every 2 weeks. Well, I did the same thing, you know what I mean? And so saying no to those customers that are going to actually put money in your pocket is kind of difficult to somebody. I mean, and somebody who was in the same position I was, just starting out with nothing. And so that's something you got to kind of work up towards. And as far as knowing your worth, like, can I afford to drive 40 miles to go cut this yard for $40 and bring home $5? I mean, so, and it's like I said, it's scary, you know what I mean? Especially if you're starting out with nothing, you know what I mean? So my best piece of advice to anybody is keep your job, do it part-time, build up your money in your bank. And so that way you can hire employees, you'll have money to pay them, you have money to pay for insurance, you know, don't jump in like I did. But if you have to, I mean, you have to realize that your time is money. You know, I mean, that's a big thing in our business. The time is money, and so you got to get it in your head that you're worth more than the guy who's telling you, "Oh, my last guy did it for $20." You know what I mean? Or the high school kid down the street will do it for $10 real quick. And so you have to kind of work yourself up to tell people no because they're not going to pay your bills. But 2 houses down, they will. You know what I mean? There's always going to be somebody else, and that's my biggest advice. There will be other customers. I know, and I see in the comments of videos and on Instagram and stuff like, man, you know, my business isn't doing good. I mean, move your business. I mean, if you got to go, you know, instead of your neighborhood, you got to go 2 neighborhoods over, then do that. But add in that gas money, add in whatever it's going to cost you to get to that neighborhood. Don't just get out there and do it. So you know, your $30 yard might be a $45 yard over there. But that's where the customers are. That's where the people that are going to pay you what you're worth. You know what I mean? And so, yeah, you just kind of tie them up and just be like, no, I can't work for that much. And you'll come to see that. I mean, some people will be like, well, yeah, okay, yeah, we'll get it because we know you're professional. We know you're going to do a good job and you're going to show up every week. So, I mean, you got to really sell yourself. And so you don't get those no's, but I mean, you're going to get them and just know that, okay, well, then you're going to knock on the next door or you're going to knock in the next neighborhood and just keep going. You can't let stuff like that kind of distract you. And it will, man. It's tough sometimes, you know what I mean? Especially first starting out. But yeah, you got to know your worth and you got to know what your costs are. So you'll be able to say no and move on to the next one.
Yeah, no, it's true. I don't know, Josh, you may remember Mario in our first couple of years. He moved he at 3 different states in the time that I knew him. He just kept moving his business to try and find where am I going to make the most amount of money, right? That's to Tino's point. Mike, Chris, how many times do you have to say no, or do you say no?
Well, it depends. The earlier years, I was more inclined to accept different jobs because I didn't know my cost. I didn't know expenses or what I should charge for this. Now we are at a point where if the cost is maybe not a perfect fit for that customer, we stay firm on our prices because I know what we need to make on this particular job, what our costs are. So it's times that you're going to have to say no and turn customers down because a customer, if you allow them they'll talk you down to free. Okay. And that's something that I had to learn. You might have a lot of different clients, but you have to stay firm on your prices. So definitely it's times that I had to turn down work because I know what I need for this job. And if that customer may not could afford it or want to talk you down, you have to figure out your right customer and your right base customers.
It's easy. I've always heard this saying, it's easy to bring your prices down. It's very difficult to bring your prices.
Exactly. I had to learn. I didn't mean to cut you off, but I had to learn that the hard way. When you go down, you can't say, "Oh yeah, instead of this being 2,000, yeah, it should have been 4,000." You can't do that. Once you go down, you're on a downward slope, and you can't recover from that.
Yeah, JC, you're representing the part-timers in our community right now. It's got to be difficult for somebody who's part-time to consider that, to say no, even though you know that you might be making money doing something else, but you want to build a business.
Yeah, being part-time and being new. When you first start off, you have enthusiasm. You want to go out there and clean house and just try to make as much money as you can. But you also have to be, I'll say like with the Boston accent, you got to be smart about it, because that's where you make your mistakes. And saying yes is a lot easier than saying no. A lot of people have difficulty with saying no. I myself included had that problem. And I think we spoke about that in the first segment we had with the live stream. And an example of that, I also had a property that wasn't worth my time, and I was headed out there. It was too small of a property, and it was too far away. Now, I know small properties, sometimes if they're close and if they're within your route, they're quick, they're easy, they're a moneymaker. But this one in particular wasn't for me. And I had to say no. I was getting paid what I should have been getting paid for that property, but at the end of the day, it wasn't beneficial for me as far as costs. I could have done 3 or 4 or 5 other properties that were a lot closer, a lot bigger, and made more of a profit. I was wasting time on that property, so I had to say no. And it's not particularly easy to do, but you got to remember, like Josh says, you're in this business for yourself, like not for yourself, not being selfish, but you have to take care of yourself. You have to watch out for yourself. You have to be watchful. And that's a lesson that you'll find within yourself with time. But if you're a part-time worker, part-time, you want to make the most money. If you're doing part-time, you're not making much, you're not going to last. And you want to definitely make sure that you're growing. So be smart about it, right? And learn to say no. And that's how you will succeed if you continue making those right choices.
Josh, I'm gonna let you talk about this one. How important is it to say no, whether you're just starting out or at your stage of the game?
Well, in the beginning, I mean, I'm the same as everybody else in the beginning. Like JC said, you're just trying to grab as much as you can and be that guy. And the problem with me in the beginning was I grabbed so much of that work that when I was taking like the little bread and butter, I was missing the meat and potatoes later on when someone had a real good job. But I'm at the point now where I realized that my time is worth more than going on the property and negotiating a $50 lawn cut for somebody. Or it's like, have we talked about qualifying customers on the panel yet? Or
not yet?
Not yet. Okay, so we're getting on that. This should have been the follow-up. This should have been the follow-up segment to that. But yeah, no, it's important. Like, again, knowing your cost and knowing your time to sit there and argue with someone or negotiate with someone over a lawn cut, over labor, walk away. I mean, if it's easier said than done, but a lot of the times what ends up happening is you haggle with that person, and you're on doing that job, and your phone rings 4 or 5 times, and you have those, gold ticket jobs that are hitting you up on the other line, and you're sitting there doing for something for 30% cheaper than what you would have. So, if there's any bit of advice, swallow it, walk away, say no. I mean, listen, I'm fresh now. Bye. I'll walk right off your property. I'm not even trying to pat myself in the back. I don't waste time with people anymore. My time's valuable. I know that, and that's not to sound cocky, but I'm not going to sit there and waste my time with someone. We qualify the phone calls when they come in right now, and I honestly get offended when I go in and someone goes, "That's the best price you have." Like, yeah, yeah. I spend a lot of time doing my math on my Excel sheet. Like, trust me, it is.
Well, why don't we start talking a little bit about qualifying customers? I think it's a perfect segue here.
Am I starting this one?
Yeah, this is your topic.
All right, cool. So all right. So when your phone rings and you get that phone call, I'll use the example for a lawn cut. Hi, this is Bob Smith. You know, I got so and so. It's easy. You know, I got a little bit of weed whack, and it can be done every 2 weeks to 3 weeks. You know, we're listening to the verbiage they're using when they call. And you know, when you get those people that call up and you know this can be done then, this can be done this, that's a red flag for me. Typically, when they call, we have a baseline minimum for our mowing. We don't do a lot of mowing, but our baseline minimum for this year is $65. No matter if it's a postage stamp and we're in and out in 4 or 5 minutes, it's $65. It does not matter. That's what I know we need to charge for that property in a very condensed route in order to make money. On our retaining wall jobs, it's the same thing. We give a rough idea of what they want. We need to know if they have designs they've already looked at. We need to know if they have budgets in mind. They give us a rough idea of square footage, and this is all before we go out there, just so we don't waste our time. In the beginning, even with the construction consults and estimates, I would waste honestly close to 4 or 5 hours and not charging this time, coming up with estimates, coming up with designs, drawing things up on a spreadsheet just to be the nice guy because I wanted the job. Now I charge for that time because I know either they're going to pay $300-400 for that consult fee and that design, or they're not going to do the job. I own that design at the end of the day. So in order of qualifying them and explain to them in detail, like, listen, this is what things cost. We'll give you a rough ballpark of what things cost, but we need to come out. We need to measure for elevations. We need to measure, make sure there's not gas lines in there. These things all cost money times. This is the consult fee. You know, you can buy out the rights to the design. A lot of the times we'll get I'll give you a call back in a couple days. And they never call back. And the ones that usually like, all right, fine, here's my credit card, they write a check. We know we can move forward. I know it's a little bit more difficult in the lawn care aspect of it because it's very competitive. But if you cut those down, like everybody talks about, cut your bottom 10%. And I'm a big believer in that too. But if you did that upright with qualifying and say, hey, listen, my minimum to come to your house, even though it's right there, $65. I don't give the discount. Because you're next door, I'm not going to do it for 40. I don't believe in that method of because I have 7 houses in the same neighborhood, do it for a cheap price. Forget it. Qualify them, make sure they know what you're getting, and you don't have to cut the bottom 10%. You made your profit margin off it.
Yeah, good point. Mike, is that what you do as well with the lawn care that you manage?
Yeah. I mean, we'll do it with everything. It's we try and find out pertinent information as fast as possible. So if I get somebody on the phone, I try and find out how did they find out about us. There's, in my eyes, if they're like the best friend of our biggest client, I probably just need to go meet with them, whether it's going to be a good fit or not, because I'm not looking to piss off our biggest client by, overqualifying their friend on the phone. But if it's more of a cold lead, I'm going to find out what they're interested in. And a lot of times now I'll throw them a ballpark price over the phone, just almost kind of scare them a little bit to find out, are they really looking for us or are they just shopping around? I had an instance recently where the gal wanted a whole backyard, and she went on for a minute and a half telling me all the things that she wanted done. And I said, okay, well, that sounds like it could easily be north of $10,000. And she went, oh my gosh, we are thinking like $700 or $800. And at that point, I was just trying to get off the phone as quick as possible because it was never going to be a good fit for us. It's time for them to go find someone else. And so it's all about not wasting your time. We're very generous in this industry to, a lot of us go out and meet with people and let them try and even negotiate with us. It's our job to figure out whether they're a good fit or not for the limited time we all have on our schedules, especially if you're someone like JC who's part-time. You have to be all the more calculated. But at the end of the day, once you've achieved your budgetary goals, it's about achieving your budget for happiness and time with family, right? Like Especially, I think I heard some kids running around the background when Tino was talking, right? So you want to spend time with those. I want to take my dog for a walk because I love my dog. And so, I'm not looking to waste time with things that aren't a good fit for us. I'm looking to make money and then go do what I want to do with my life. I see Chris nodding. I imagine you kind of feel the same way, right?
Yeah, I totally agree. The best thing is when they call, I agree with Josh and Mike. You want to learn how they heard about you, what type of marketing is working, so you'll know, hey, I need to keep targeting on that. Also, the verbiage that is used. So, if my one of my main goals is to figure out what the last lawn care service or landscape service did not do right, and that's my goal. They didn't show up on these days. I didn't need them on these days, or they were always late, or lack of communication. That gives me a key point to say, okay, this is something to target on. Another thing that I agree with Mike is you throw a price out there. Before first year, I would go out and I would spend hours, and they would tell you all about the house and when they built it, and you're just sitting there, you're kind of wasting your time there. You had to figure out, okay, time is money, and I had to figure that out. So you have to value your time and qualify them on the phone. So I'll throw a price out there, and instead of leaving an awkward silence, so you'll say, hey, this price is, if it's a landscape job, hey, it's going to be right around this ballpark. I'll ask, are you okay with that? So instead of saying, hey, this may be $7,000 and have an empty pause, that gives them a lot more time to say, oh no. But if you say, hey, do you agree with that? They'll say, well, how about this? And that keeps the conversation rolling. So you want to have that conversation, and you can learn a lot. So if they're saying, hey, I'm on disability, I'm just trying to get a fair price, that might not be the customer for you, because they may try to talk you down on your prices. So it's a lot of qualifying on the phone. That's why I love to speak with potential customers on the phone, because you can tell what type of customer they will be if they're very picky. This last guy, he left these marks on here. He did this and he did that and he did that. 9 times out of 10, they may do that to you also. So it's all a learning experience. And I definitely agree with Josh and Mike. They had very valid points, and that's some of the things that I target when I talk to them on the phone.
All right, why don't we turn to some of the questions that the audience has been asking, because I think there's some fantastic ones in here. Don Stewart, who's been joining us, another Canuck, woohoo, Canadians, has asked a really good question earlier on. He's been around the last couple of sessions, so we'll make him first. How do you price snow, monthly or each time? I'm going to start with you, Mike, because I know you're the king of snow plowing.
I don't know about that. I think I learned from people who might qualify for that better than me. But we do a majority of per event pricing rather than seasonal pricing. And it has to do with the fact that we've been in the while. We put ourselves in a position where we could probably survive without having much of a winter. So in turn, when we get big snow events, we want to be able to clean up on that and make truly what we're worth, because it is tough work, and something that I've really seen over the evolution of me doing this is there's a lot fewer people than there used to be willing to get up at 2 a.m. when it's 5 degrees out, or if you're in Canada, -10 or whatever it is Celsius, right? So for us, we do a lot of per event, but it's about knowing those costs and also protecting yourself from some of the things that you can't control, like drifting or back-to-back snowstorms, or what you're going to do when you have nowhere to put snow, or what the price of salt is going to be. Unfortunately, in snow and ice, there are a lot more variables. And so you got to protect yourself no matter whether you're doing seasonal or per event type work. But it's probably good to find out what type of mix is going to be best for your company and allows you to profit the most and meet those goals that you've set in your budget. How about you, Josh? What do you do?
I guess it's kind of a loaded question. So Don, are you asking how you price for a plow truck or in general? But Mike, to go with you, yeah, I actually have a mix of everything. So we have per event, we have hourly rates, and we have seasonal contracts. The new thing now is a lot of seasonal contracts are actually looking for a buyback where you pay back 25% of the contract if it doesn't snow up to that month. Again, that's where my no comes in. But the reason we mix it up is because what we lose in the seasonal contracts, we gain from the hourly and the per events. We make probably half of our revenue off of snow and ice management, typically residential. So for us, we're trying to average, Don, around anywhere from about 175 to like 275 an hour on a plow truck. Those are with condensed routes. Those are being right around. That's typically in the target area. Now we have hit a $350 an hour range. When we've had that light fluffy snow, it might be, 4 or 5 inches of just a quick push. But typically, yeah, we're in that like 175 to 275 area. And that's a good rule of thumb for, I think, anybody to be in that ballpark. If you're, counting wear and tear, insurance, your own pay while you're in the truck, and blades and everything that runs down. But as time goes on, you do want to try to mix it up. We have residentials that we charge. We offer seasonal contracts too, with a cap, without a cap. If you want to DM me on IG or something, I can kind of walk you through it. I have a whole bunch of formulas I use for snow plowing. I've been doing it for a long time, and it's one of the things I am kind of proud about. Like we make money off snow plowing, and that's one of the big things. I'll walk away from. I'll say no more likely on a plow job than I will on a hardscape job.
That's interesting about the buyback thing. That's actually part of why our market, some places are like really into a seasonal price, and then a surprising amount really want per event at this point because they feel like they're getting exactly what they pay for, and they just know they run the risk that the price might be pretty hefty if we get a foot of snow. But then again, it's a different market, right? We don't get those big nor'easter storms. We get a lot more of those 4 to 5 inch powder storms you were talking about.
Yeah, we don't get them anymore either. The nor'easters, we maybe got a handful. The buyback is fairly new, and I guess the motto behind that is like an honest dollar for honest work, which I get the logic behind it, and they try to sweetheart you in by giving you a 4 to 5 year deal. To me, if you're new and you don't have the financial backing, stay away from it. I have a company that we sub one of our skids for. Actually had a payback last year, $55,000 on an account. So stay away from that. That's not even something I'll play with. We have a little bit of that backing, but I'm not paying $55K back. No way.
Anybody know, Anchor Landscape asked, does Yardbook have an app to check off things during the day as you're spending? Anybody use Yardbook? No, if there's anybody out there listening, maybe respond.
No, but Jobber does.
Yeah, so Yardbook, I don't use it. Well, I mean, I do and I don't throughout my course of work, but I usually go to it after my day's ended, and they don't particularly have an app. I have an iPhone, so I think like you could kind of like download the home screen or whatever, make it like some type of app. I don't think they have a functioning app. I'm not 100% sure on that because Yardbook always changes. It's ever changing. They always add new features, which I love about it. But it is a little tricky to navigate it and to see what some of the features are. But I'll find out. I'd be interested in that too.
Just real quick, Jar Landscaping. I'm going to send them kind of a format we use for pricing. It was up on my website for a while. I think our website's under construction right now, but I'll send you guys out a format of how we price for small, medium, large storms, because there is a difference where we do tiered pricing.
Yeah, actually, Abigail and Jacqueline made a comment earlier that I wanted to highlight that I thought was really smart. And that's, especially when you're first starting, and we're going to get to the question about establishing credit or getting credit in your first year. as a segue to this, but their comment was talk to your dealer when you're first starting, especially when it comes to maintenance, managing your maintenance costs. If you get a demo, you're spending a little bit less, and you'll probably get a 3-year warranty, or depending upon the product, a warranty on it. Sometimes a refurbished model will also come, like a car will also come with a warranty. You know what I mean? I think that makes a lot of sense, doesn't it? Anybody else done that?
Yeah, we bought a truck in the fall that came with a plow and a salter, and they had used it the previous winter in the parking lot at the dealership. So it had 400 miles on. I think they might have also taken it to one of the last pre-COVID trade shows that happened. But we saved a lot of money, and it came with a full warranty. And basically, they've had to treat it like it's a brand new truck. I was happy to save the thousands of dollars. So yeah, that's a great tactic. You're essentially buying new, but getting to save on the front end.
Yeah, and if you take a look at now, that we're in the spring or in the winter, now is the time to be asking those questions, especially for last year's like mowers and things like that they're trying to get out, and you still pick up a warranty. But that's smart for when you're starting a business. One of the questions that was in the chat was, how do we get credit? How do you get credit in your first year of business so you don't have to go into your personal line? Do you guys got any advice for him there?
I think one of the main things. I think one of the main things for us, and I definitely had to learn this down the road, establishing your business the proper way. So make sure that you have all the documentation, licensing, everything matches for your company. Then you can go into different trade lines to establish and figure out, okay, get your, I think it's your DNB number, kind of like your credit score for your business. And that's something that we had to learn, because we were like, okay, we need this mower, we just take cash and do it. This way you're establishing your business. So let's say down the line you need $20,000, $30,000, $40,000 credit line. You can use that, and you've been establishing your on-time payments. It's similar to your personal credit score, but it's your business credit, which is extremely important. And I didn't know that starting out. So that's what I would work on, is your trade lines. Make sure you have your on-time payments. Then you can go into some different retail accounts, like gas cards, different things. And after you establish that way you can go into more of the cash accounts, cash credit cards, where you can spend it on whatever you would like. So that's something that you definitely want to focus on. And if anyone has questions about that, feel free to reach out to me and I can explain that in further detail.
Yeah, that's really well said, Chris. The fact that it's gonna take time, that's why I said good luck. Like in year one, you're likely to have to personal guarantee things if you're trying to open different credit lines. But if you go the right way about it and establish yourself and prove your worthiness, eventually you can get away from having to guarantee those type of things, and the business is its own viable entity, and you've built those various relationships and succeeded with it, and yeah, it's tough in year one. Anyone that says otherwise is fooling you and themselves. So it's all about having that plan and then being willing to stick with it and realizing that might be something that takes a number of years to get it to be where you really want it to be.
Well, one quick thing, when you're using your personal credit for your business, so let's say you have your house on there, you have another car on there, that takes away from your debt to income ratio. When you're putting it on your business, that allows a lot more to be done for a numerous amount of vehicles, numerous amount of equipment. So that separates your personal, and you're putting it into the business where you can grow from there instead of trying to put it on your personal. And let's say you're trying to get a different credit card or anything different on your personal, that's really harming your debt to income ratio, which is going to put your credit score down. And when you go to your financial institution, they're going to look at it and say, hey, well, we see this mower, we see this truck, and let's say you need that second truck. Even though you have that business, they're more inclined to deny you based on your personal, opposed to opening up on your business credit.
You know, that we got a question in, actually one on snow and one on lawn cutting. So it's the same question. Contracts. So Luke is asking, do you guys recommend getting signed contracts for residential lawn maintenance? Is it even necessary? What do you guys recommend?
Absolutely. We get contracts signed on everything. No work is ever done without a signed contract or a signed change order. It's unfortunately the litigious society we live in. If this were a long time ago, you know, we could all be men of our word and shake hands on it. But it's just the way of the world, and it's just a safe way to operate your business, especially the liability that we all carry that just increases into those winter months sometimes. So in turn, those written agreements are what protects you and protects the client and gives everyone a clear outline and objective as to what's going to happen and how it's going to happen and who's responsible for what. And so we wouldn't consider doing any business without a contract.
Hey, Josh, I think the issue here is also, you know, keeping it in the theme of this talk, which is knowing your worth. There's a liability issue here. You know what I mean? Like, what's the cost to you if you break an irrigation line or something like that when you're trimming? You know what I mean? So you want to talk a little bit about that? Like, I'm assuming you've got a contract for everything you do.
So on the hardscape side, yeah, definitely. On the lawn maintenance side, I want to call them more of agreements than contracts. Personal reason behind that, I laughed someone out of the park if they ever came at me with a lawn mowing contract. That's just my preference. But the reason I call them agreements is because there's disclaimers on those agreements. And those disclaimers, like I put in past videos, where we're not responsible for damaged irrigation heads if they're not installed correctly. We make it quite clear that we walk the property the first time around. And if there's, dog leashes, if there's damaged fences, we're not paying for anything that we didn't, like a guy on my crew doesn't admit they broke. So we use our agreements to really fill out the disclaimers so that people know. They know the terms of when they're paying. I guess in a sense you could call that a contract, but we verb it as an agreement. So it's just not so aggressive to a customer. We use it for disclaimers and mostly just terms of payment.
I think, Craig, if you're still on listening, I think when you and I spoke, you were saying that, you don't take contracts. You know what I mean? Like, so I'm pretty sure it was you when we did one of our interviews, you mentioned that. So I'm curious to hear from anybody that's just like, listen, it's a marketing gimmick. You know what I mean? No contract. Just, you know what I mean? I'll keep doing it until you tell me to stop.
Sam, I actually, I'm with Josh a little bit on that one. Again, being part-time, being smaller than some of the other guys, on my door hanger itself, it kind of has like the fine print per se, and it has my agreements as far as whatever they select as far as the service, whether it's weekly or bi-weekly, what in the event if there's like inclement weather, rain, when I come back, so they know up front what they're signing up for per se, as far as what I provide for a service. I hope to get at some point in my business where I could start offering, contractual agreements. I guess I can now, but yeah, as far as the lawn care side of things is for me, for what I do, I have that as a type of agreement right on the door hanger, and I have them fill it out. Even if it's a word of mouth customer, I go with my door hanger, have them fill out what they want, and I keep a copy of that card and I file it for myself.
That makes sense. He had a follow-up question about DocuSign. Anybody actually use DocuSign, or is it all just when you're signing these agreements or contracts or whatever, or door hangers, whatever you want to use, Do you actually just physically sign, or do you do this digitally?
I do a digital, probably like Mike through Java, but I am experimenting with DocuSign this year, just for the construction stuff unrelated.
Yep. Yeah, it's that's the beauty of the technology, right? People can just sign it, and it just gets emailed to everyone, and we move on and get the work scheduled and get a deposit.
Yeah. On the yard books, Aaron just commented for I forget who it was now. I don't even remember who asked about the app, but apparently Yard Books does have an app right now that's in beta. So I'll be coming out for anybody that's looking for that.
Sam, can I interrupt Ruli for a minute? I just want to back up to that credit discussion. I got an itch I got to get out here. Just real quick.
Surprise.
Mike and Chris hit it on the head. You want to separate the entities. You want to have your federal tax ID number. You want to have your DUNS number. Just a quick tip for guys out there. When you're establishing, when you finally get that ball rolling of having that credit, you do have to clean up your own credit, have good credit utilization, get your score up. Your business credit isn't ran on your debt to income ratio on the business side. It's basically whether or not you could pay the debt. So when you have that Spark credit card, or you actually have a line of credit, they're looking just to make sure you have a $17,000 balance. You paid it off. It's done. They don't look at, you utilize it to 2% or 7%. Now your score doesn't work the same. Now a trick that you guys can use, if you have a dealer, if you sub out fertilizer, you can ask that company to report your payments to Dun & Bradstreet, and that will actually get a record for you, because without that, you're not going to develop anything. Now, I saw questions in the comments or comments in the comments. A personal guarantee while you're building it, 5 to 7 years, you're really looking before you can actually take credit out in the company name, but you're always going to have a personal guarantee on a loan. No one is going to lend you money going, Echo Incorporated can take this out. There's going to be a personal guarantee somewhere down the line, whether it's CEO, CFO, someone's going to have to guarantee that. But I think the best trick for you guys is to reach out to subcontractors, dealer, make them, even if it's a $25 payment you made, have them report it Dun & Bradstreet, and it'll show up on the report every quarter or once a year. You're going to get almost like a credit report for your business, where that payment will show up and show like open accounts, revolving accounts, things like that. So.
Interesting segue here on that. Just one of the things that I'd wanted to touch on at some point, and I'm glad that you talked about personal credit. We're talking about business budgeting and business planning. If you're going to understand how much you need to make, so Josh, you were talking about, taking a base salary. You take a base salary, which is what I do as well in my business. Take a base salary, and if there's money left over, then I make a little bit extra. And if there isn't, well, then I've got a base salary that pays my basic expenses. But one of the first things my business partner and I did when we started this business is, well, what do you need to live? So we didn't say, okay, well, I want, $100,000 a year. That's my base salary because I just made it up. We actually looked at each other and said, okay, what are your, what's your mortgage? What's your car payment? What are your kids' school costs? And so I'm wondering how many people actually set personal budgets and, look at their personal expenses so that what your minimum take has to be when you're figuring that out. Can we give these guys some advice about setting, looking at your personal budget? Mike waved first, so let's go to Mike. You do this, right?
Yeah, it's all the things that you said. It's your real life costs that have nothing to do with your business life. We all gotta have food on the table. We all like to hopefully go get a physical once a year, get our teeth cleaned. I like to take my dog to the vet and get him groomed. And, I have a home. It has insurance. It has property taxes, all those fun things. A couple of years, I'm going to need a new roof on my house. And so you've got to be able to budget for all those things. Otherwise, you're just going from one terrible life crisis to another. And, if you do the business thing, there's going to be many fires you got to put out in your business. You don't want to come home and put out fires too if you don't have to. So it's about knowing what are your baseline costs, and then what are your projected future costs, and then where do you want to go? Is that salary going to have to go up over time to meet where or if you've got a business partner like Sam mentioned, for both of you. Does it work today? And then what do you think's going to work down the road? That way you don't run into, a tough conversation years from now where maybe his costs have gone up and you stayed the same, and there's an issue there in terms of where you both think you're going. So it's budgets just allow you to be really transparent about it, and it takes the I feel out of the situation, and it just makes it really factual. This is what the numbers say, and you can work to change those numbers, but they really are reality. And so the more you know your numbers, both in the business and outside of the business, the more likely you are to just succeed in life.
Josh, you were dying, so I'm not going to hold it in anymore. Go, and then I'll go to the other guys.
Mike just stole my thunder, so I don't I don't know where to go now. But no, I piggyback off Mike, and I can't say more than yes, and agree 100% with him. But like, I think my biggest thing is that for you guys that don't necessarily think you have overhead, what Mike just explained, if you're starting out, that's where you can get your budget for your overhead. Mike has a mortgage. Mike has PMI. He has homeowners insurance. He has water bill, gas bill. You can break that up into however long you're planning on work and at least get an idea of what you should charge hourly based off that number, and then apply your profit to it. And then think of that number 2-3 years down the line and account for inflation and then profit for the inflation. Thanks, Mike.
And there's the other side to that. You know what I mean? If your office is in your home, or you're using your actual garage, to store your equipment, when you do your, when you're looking at your personal taxes, you can actually claim some of that as well, right? Tino, do you do that on your corporate taxes, your personal corporate taxes at the end of the year?
Oh yeah, definitely. You can.
Sorry. Does your wife do that for you?
Oh, yes, she does. Exactly. But yeah, I mean, there's so much when you're doing your taxes. I mean, if you don't have a bookkeeper, I definitely read up. I mean, online, wherever, find out. I mean, your cell phone, your electricity bill, your water bill, your space. I mean, they specifically ask you how big is the room that your office in, because that's going to say how much money you're going to get back for being in a 2,000 square foot house or whatever your house is. All that adds into it, and you'll get deductions from so many things. I mean, even if we used to do the taxes on TurboTax, and TurboTax will tell you like, hey, you're missing all these deductions. Do you have a cell phone? Do you have a home office? Do you use your personal truck and stuff like that? So, I mean, if you're doing taxes yourself or you're using the bookkeeper, definitely see where you're at, where you can save money and make money.
Yep, for sure. I got one last question that I saw in earlier on in the chat that I'd like to address before we go, and that is how much do you raise your prices on an annual basis? Right, we're talking about knowing your worth and growing. I think I saw some comments. Listen, everybody gets a cost of living raise. Why shouldn't we? How do you guys do that, Chris?
Well, that's a little difficult because when you have your customer base, you can't just say every year this guy's going to go up or this female is going to go up $5 to $10. So I think as long as you're pricing it right, where you're making profit, you of course have to check and pick a percentage, but I wouldn't say every single year they have to have this designated amount to go up, or you're just going to price yourself out of business. In my personal opinion, I think if you price it profitable the first time, check it out a year, 2 years, go up a percentage, I think that's okay.
I'd like to ask everybody this question because I got a feeling there's going to be a different answer from everybody. JC?
Yeah, so for me, I'm in agreement with Chris. I don't just raise prices to raise prices. I base it off the circumstances that I'm faced with. Whether it's something that I made a mistake on the year before and I was doing a property for way lower, charging way lower than what I should have, or if it's increase in expenses as far as equipment, property inventory, things that I need for a job. I have to say though, I think right now I'm at a little bit of a comfortable state with the prices that I'm charging right now. So there's only been a very few properties that I've had to raise the prices on. And for the most part, the customer has kind of been okay with it. There was this one particular property I had that was just, it looked easier than what the job actually entailed. And when I first initially priced it, it ended up being, again, not worth my worth. And I adjusted from there, so it's like, it kind of goes back with saying no, hey, listen, I'm going to have to raise the price because this is why. If they don't like it, then you move on to a next customer or a new customer, that's pretty much it.
Mike, what do you do? Do you have a percentage every year that goes up automatically?
Yep, it goes up every year. I'm racing to the top, not the bottom. So, you got to be, like the last two guys said, you got to be realistic. It can't be, GameStop to the moon pricing every year. But it's important that you realize that likely your costs are going to go up. In the time I've done this, the cost of a zero-turn mower has doubled. And so you've got to realize that whether you perceive it or not, your costs are going to go up, and you need to pass those along to the clients.
Mike's a baller. Racing to the top. I love that. Josh, how about you?
Yeah, it's a soft increase, but not across the board. It's to different departments. Mowing, we might go up 1 year. Trimming, hardscape, masonry. The one thing, and I kind of want to segue this into the EMB forum. My COGs go up every year, and I just found this out from talking with the TEPCO and the Cambridge rep. A lot of guys aren't marking up their pavers, their cost of goods, your fertilizer, your pavers, your grass seed. A lot of guys are giving that out for cost, which I scratch my head on that because there's markup on that across the board. So my COGs, I make a lot of profit and I make up a difference with that. So those go up probably about 2 to 5% every year. And then the labor might be about a point or two in different areas of what we do.
Do you think it's worth? Sorry, go ahead, Chris.
One thing is that I feel that you need to be very honest with the customer. I don't quite think it's fair to go up every year. And the reason is that a customer, when they're paying you, they understand, okay, this is how much it's going to be. And if you do that, just in my opinion, there's a saying that pigs get fat and hogs get slaughtered. So if you're going up and pricing yourself out of that neighborhood, so let's say if it's a $60 neighborhood and you're 65, 70, 75, and they have that budgeted into their account, you're probably going to end up losing that account eventually. And then you're going to have to start back over and try to price into that 60 where now you might be getting 55. So that's why I don't believe in pricing increases every year. You have different ways that you can do it. You can have landscaping, mulch, hardscape. Those are some of the segues that you can use to make up some of the extra amount. But I don't think it's fair to the customer to say, hey, every year we're going to go up. That's the way I feel about that.
We lost Mike for a bit. I think he had to go to the bathroom. Mike, you better keep us on mute when you're out there. Josh, should we be putting these in, into agreements? Saying that there is a 1% increase, every year or something like that. What are your thoughts on that?
Say that question one more time. I kind of lost you for a second.
Can we recommend or not recommend to those listening to put a potential price increase right into the agreement that they sign right away?
If you have auto renewal, you're obligated to in some states. Personally, if you don't do that, I wouldn't. If you're trying to gain a customer, that might scare them away. But not to argue with what Chris said, the reason why we do a soft increase each year, the cost of business goes up every year, whether it's workman's comp, whether it's insurance, whether it's taxes, whether it's gas. Guys want pay raises every year. So you kind of have to, pivot and apply and adjust to that. That's why we do the soft. We don't say, obviously, there's a market value on your lawn mowing where, you're not going to get to an $80 cut on a $40 lawn. At that point, you have to adjust and maybe lose that customer because it doesn't fit your business model anymore. But to get off my sidetrack here, if you're auto renewal, yes, you got to put that, even if it's half a point. If you're not auto renewal, no, slip it into your renewal contract. Being, hey, we're going up due to the cost of so and so. Pandemic. I don't know.
Just to touch base on what Josh said, increases, I understand that, but if you run a pretty lean system and you're making good money, why overcharge a customer? I understand that gas is going to go up and different things are going to go up. And yes, I'm not saying not to increase, but annually on a regular basis, sometimes it's not necessary to do that. As long as, let's say, my cost and your cost are way different, okay? As long as you're making your profit, I don't feel that you have to go up on every single customer. In my opinion, you'll price yourself out when there's different routes to make different profit. You have hardscape, you have landscaping, a lot of different ways. So to put that in a contract for me, I don't think that would be a smart decision on my end.
Chris Horning in the comments just said, I'm all residential, 100 regular customers, no contracts yet in 13 years. Good for you. Clearly you've, and let's hope it keeps that way without any legal issues that Mike is warned about. Put it out there. So I can tell that my supersized glass of wine is empty. So that means that we're running out of time here on this chat. We're going on to the 2-hour mark as it is. So I just want to go around the panel. Before we go, thank you everybody for listening. But I want to go around the panel. Any final thoughts? Something that you wanted to say in your head that you want to get out before we go, or a recap of the most valuable lesson here today. Tino, we'll start with you.
All right, bye, y'all.
All right, that's a good one. All right.
Definitely, the biggest advice would to really take a hard look at all your numbers. Pull everything from, like Michael's saying, stuff that you don't even think about, including your business stuff, your personal goals and stuff like that. As far as doing contracts and raising prices and stuff like that, I'm gonna jack them up every year like Mike. So it's everything changes, but I mean not to that far extent. You'll keep your group of customers that are staying with you throughout the whole year, through the winter when you're not even cutting or anything like that. And those you could do like Josh was saying, a soft increase, but then raise your prices at the beginning of the next year. So all these new customers that you're getting in the spring, they're at $50. Your other customers are at $45. And so that's your point, to get them slowly to that 50. If you don't want to just take everybody up $10 every single year or whatever, you can kind of work different ways to do that. But definitely, if you don't have a budget, you don't have your money, what you're spending every year added up, and some kind of way of knowing how much it's going to cost you to cut that yard instead of how much to charge, that should be the main thing that you're focusing on. If you're doing year 1, year 2, year 10, whatever, I mean, you got to have some kind of way to know how much that you got to spend to cut that person's yard, or to build that landscape or that flower bed or whatever it is.
All right, JC, final thoughts from you.
Yeah. Number one, remind yourself why you're in this business in the first place. And I think it kind of goes with the title of this this segment, Know Your Worth, right? That's basically what we talked about all day today. Tino brought it up first. The budget, right? Know what you're spending, know what your costs are, know what your goals are. I think that's very, very important to kind of get you on that path. And third, my biggest takeaway also too is like, have some respect for yourself. Learn how to say no. Don't be afraid to say no. If you're wanting to make money in this business and you want to take care of your family, you want to continue to grow, you're going to need to learn all those 3 things. So I think those are my biggest takeaways from this.
Cool. Mike left and came back just so that he can move up on the screen here. So Mike, why don't you go next? Final thoughts. Or how about we skip Mike and we go to Josh? You're on mute, Josh.
There we go. Well, first of all, sorry for chiming in late, guys. I wasn't even supposed to be on the panel, but this is a topic that I'm very passionate about, and I like the business that I had to bug the crap out of everybody at Cincy to try to sneak me in here at the last minute. So I appreciate that. I think everything that these guys just said, run with that. Again, like JC said, show some respect for yourself. Remember why you're doing this, and you're into this to make money, to have some freedom for yourself. Remember there's quality of life when it comes to owning a business, and enjoy yourself. Ask as many questions as possible when you can. If someone gets annoyed from you for asking questions, they're a tool, walk away. You should be able to ask people. There's recurring costs to everything. Learn them as you go. You're going to make mistakes. Even the veterans that have been doing this for 20, 30 years make mistakes. Don't be afraid to fail. And that's not trying to sound like a self-help book, but like, honestly, you got to follow to learn. So, that name on the bottom of my thing there is Instagram. If anybody has any questions, again, I'm passionate on this. I don't have the answers for everything. And if I can't help you, I'll find someone that can, but I really enjoyed the segment. I wish I could have spent more time on it. So.
Yeah, well, we're going to have to do a follow-up on this one for sure. Chris, final thoughts from you.
I just wanted to thank you guys and thank Echo for hosting this event, because this is awesome. We have all these gentlemen here that's very successful, giving a lot of different point of views, and I just think this is an awesome platform. And going to echomeansbusiness.com to check out all the pros that's on there. This is where it's at. When you need different information, having this roundtable discussion helps a lot of people. So I just want to say that first. But just in closing, my main thing is for anyone that out there that's thinking about getting into the green industry, invest in yourself. Always invest in yourself. You want to make sure knowing your worth, you want to know all your costs, and everybody already went through that. So your cost, make sure you save for the winter time if you can't do snow removal, and just overall believe that you can do it, and listen to these guys up here, okay, and try to find someone that can mentor you, give you key strategies, and pretty much sponsor yourself. Invest in yourself, because that's what's going to lead you to being more profitable and lead you into early retirement and being comfortable doing that. So thank you guys again. All you guys are awesome up here. Couldn't see too many that was in the chat, but thank you guys for coming up here and asking questions. And I enjoyed it. Thank you.
Good crowd watching today. That was awesome. And thanks for calling. I was going to just mention that as well. So thanks for doing that for me. For those of you watching, just as a reminder, the user advisory group that is elected or selected every year to help mentor this community. These four gentlemen and Mike, who has been having some computer difficulties and had to bow out there, are members. It's a 30-member group. None of them are paid. So this time that they're giving here is here as well as on the site and on the mobile app that's available on the iTunes store as well as the Google store. It's all, they do that all just because they want to help. So reach out to them individually. They're really good guys for that. We're starting, if you're watching this live tomorrow, check out our new segment on Meet the Pros over at echomeansbusiness.com. We're getting to know all of these pros a little bit more personally with some quick 15-minute interviews. Aaron is going to be, Aaron Reese will be our first one. That'll be live tomorrow morning at 9 a.m. So go check it out at echomeansbusiness.com. If you're watching this in the future, it's posted. There's going to be a whole bunch of them there. So go check out those videos as well. And look at the forum. This conversation is happening every day in the Echo Means Business forum. So jump in there anytime you have a question. Thanks, guys, to the four of you and Mike, who's not here. Really appreciate your time. Good night, everybody.